just started investing and you want to know the mistakes to avoid, you're in the right place. Making money as an investor can be difficult and requires a lot of patience. There are tons of mistakes that investors make on a regular basis, and these cost them a lot of money. Even though learning from mistakes makes you better, wise men learn from other people's mistakes. This will save you time and allow you to be more successful. Hi, Matrix Money Maker here. Today's video is about the 7 investors' mistakes to avoid at all costs. Make sure to subscribe and watch until the end to see the most common mistakes that investors make that you must avoid. The first mistake is timing the market. No one can predict the future, and still, there are people trying to predict the fluctuations of the market. This is one of the most common mistakes that investors make, and since the Dow Jones was invented in 1896, no one has been able to make a fortune from trying to predict the market. It is from this principle that the famous quote, "Time in the market beats timing the market," is from. Focusing too much on what is happening generally in the stock market, trading every day and trying to invest at the right time is considered to be a great mistake. Everybody wants to make tremendous profit while investing in the stock market. That is why buying at the lowest price on the market and selling at the highest seems like a great idea. The thing is that it is not as simple as it seems. For instance, you could have found a great company to invest in, and even though all the statistics and analytics showed that the price of the stock was going to rise in the next months, the COVID pandemic just drops on the world, making the market collapse, and you haven't been able to make profit from that company. Or let's say you have invested in a good and profitable company during the last months. Even though the company was set to make incredible profits, the war just happened, and as the crisis grows greater, the price of the stock decreases drastically. The point is, you cannot predict every ups and downs of the stock market. Aggressive growth projections. It is a mistake to forecast a company's stock to grow tremendously in a year. The problem is most of the companies and investors out there try to make a massive amount of profit in a short period of time, and they're wrong for that. Of course, you should invest in companies with a high chance of growth, especially if you can get a good percentage of profit from those. However, growth at any price is not the best solution. Another mistake is to pay attention to many details. Most of the time when trying to close a business deal, analyzing a stock price, or even investing in a new business, we try to analyze every detail of it in order to make a firm and good decision. When trying to invest in a business or when analyzing the stock of a company, only 3 things are really important. The management, which refers to the coordination and administration of business activities, tasks, and resources to achieve a set objective. The management often involves training of staff and supervision, overseeing core operations, and designing company infrastructure to optimize for the future. The future economics of the business and industry, which refers to how the market will perform in the future and what are the chances of succeeding, and also the prices. These are the main things to be looking for, and these are the main things that will get you the best results. For instance, Warren Buffett, one of the best investors of all time, closes a business deal within 15 minutes. Not only because he's a professional, but because he likes to keep it super simple. Besides, in 15 minutes, you can understand everything you need to possibly take in consideration to make an effective decision. You can end up making a few mistakes, but those are not the mistakes that count. On the contrary, if you analyze too much and take everything into consideration, it is highly probable that you will miss the opportunity of a lifetime. Getting attached to your purchasing price. Just like you cannot predict the market, it is important to know that you will never buy a stock at its lowest price to get the highest profit. Sometimes, even though they made profit, some investors get mad because they bought their stock at a higher price than other investors. Consider this example. If you bought a stock at $50 and the stock price drops to $35 but then rises to $95, the most important is not that you could have bought the stock $15 cheaper. What really counts is that you made $45 in profit on a share. However, most people would get angry and mix all their feelings with this, which is not a good behavior, because as a result, you can make bad decisions concerning your investment. Here, it is important to stay dispassionate about the fluctuations of the market and stay consistent in your investments. The next mistake is trying to do too much. In many activities of the society, the more difficult the problem is and the more successful you're considered when solving it. For instance, in the Olympics, the number one athlete is the one who runs faster or the ones who jumps higher. Or even in mathematics, to win a Nobel Prize, the one who solves the most difficult problem is the one who will win the Nobel Prize. Well, in investing, this cannot be further away from the truth. You are not rewarded for the most difficult thing. In fact, most people think that by predicting the future of the market with some magic, genius, and very complicated equation, they will be the richest investors. However, first of all, it is not possible to predict the market perfectly, and it may even be disastrous for your investment's results. In the investment world, simple decisions and ideas yield exceptional results in the future. This mistake is somehow connected with paying attention to too many details, because the only things you need to succeed as an investor are to understand the business and its management, analyzing if it is a good industry and whether or not it will perform good in the future, and also if the price is convenient and not too high. Diversify your investments. If you fish every day at the same spot for a long time, at some point there are not going to be fishes at that place anymore, and so you have got to move on. It is the same thing with investing. Do not shrink your universe of opportunity and try to diversify your holdings. Opportunity in the investment world do not hold only at one place forever. There are opportunities everywhere. Therefore, you should have an open mind and invest in a variety of industries and dig up opportunities everywhere they can be located. Many investors only focus on one main industry, and this is a big mistake. For instance, they will only focus on real estate, on high dividend companies, or on cryptocurrencies only. Besides allowing you to discover new opportunities and setting you for success in the investing world, diversifying will surely help you not to go bankrupt when an industry collapses. Nevertheless, pay attention to not diversify too much. Only invest in major stocks that you consider profitable. Following every trend. This is by far the biggest mistake investors make. Many good habits in the common society are not always the best in investing, just like doing difficult stuff. Humans are programmed such that if everybody is running, you will probably also run. Another example of this is if everybody likes a specific music, it must mean that the music sounds good, and so you will naturally be drawn to listen to it. Sorry to disappoint you again, but in investing or in business, this cannot be further away from the truth. If a lot of investors agree with a certain stock or opportunity, do not follow their idea. It is certainly wrong. In fact, if you think about it, most investors out there claiming to be the best are mostly average investors. If you follow the ideas of average investors, and if you are behaving like average investors, you will eventually be an average investor. Follow the advice of the best investors and think of it by yourself as well in order to evaluate the opportunities. Subscribe and turn on the notification so you don't miss more video about how to make money, personal finance, investing, and much more. To see how you can start making money in your 20s, check out the latest video. Take care.